You're watching ABC4 News.
Welcome back. 2022 has been a wild year, both on Wall Street and Main Street. With the economy coming out of the pandemic, we saw near record high inflation, consistent rate hikes, and economic uncertainty all around. And as we wrap up the year, a lot of us are wondering, are things going to get any better in 2023? So joining us now to talk about how we can prepare is Jeremy Blair. He's the Vice President of Finance at Mountain America Credit Union. Jeremy, thank you so much for joining us today.
Thanks for having me.
So in a nutshell, what happened in the last year as far as the economy? What have we been dealing with? That's
a great question. 2021 going into 2022, we came out of a time where everyone was saving their money. They were on lockdown in a lot of circumstances. And then we came into 2022 and we kind of had this, the doors open and everybody kind of went crazy, and we binged a little bit. We did. We spent real hard. My favorite phrase from 2022 was revenge travel, right?
That's true, though. You're right. A lot of people going out.
They did. And so there was a lot of spending went on. And, you know, we had stimulus money that people hadn't spent that they'd saved. The Fed had low rates. That was a perfect storm for inflation, right? And then we had shortages of goods on top of that. And so that spiral of too many dollars chasing too few goods really got out of hand. And that's how we ended up with all this inflation that we've seen over this last year.
A lot of people have been talking about recessions, how to plan for the future. How is it looking at this point for 2023? What should we be doing? 2023
is going to require a bit of a shift in gears, right? We're going to go from this phase where we spent really hard in 2022. We need to get into a mindset of saving for 2023. And the reason for that is when we talk about the economy and people talk about difficulties in the economy, what we need to remember is that we're all part of that economy, right? We all drive that. And we're going to be faced with in this next year or so is higher interest rates. And right now, Americans are starting to spend on credit again. We've kind of burned through that savings over this last year, and we're starting to see credit use go up at about a decade high right now. And that's a little too fast, right? Because we're going to hit that limit where credit's getting more expensive as rates go up. Credit cards, home equity loans, those are starting to get more pricey. We need to look at opportunities where we can take some of that credit and start to slow down the spending, maybe get it into a fixed rate, roll it into, you know, something that's got a fixed rate attached to it. I know a lot of credit unions and banks, we're offering opportunities for people to consolidate that credit down so they can start looking at a more responsible payment plan so they're not getting crushed by those really high interest rates over the next year or so.
And we have been hearing more about the housing market as well, cooling off a little bit. What could that mean for people who are renting at this point? Is there any hope for them at least?
So renters are in the toughest position, right? If you're already in a mortgage, that's okay, right? You can deal with that. Your taxes are going to go up somewhat, but at least your price point is fixed. There's going to be a ceiling at some point, right? As these rates continue to go up, housing costs can only go so far where people can bear that monthly burden. There's a trade-off, though. We're in a market where the market's very hot, right? So even though the housing prices might kind of hit a plateau, it's going to be hard to bring those back down because there's still a bit of a supply shortage. And we're going to see that throughout the Mountain West at large because it's an area that's just seen such an influx of growth over the last couple of years.
It really has. It's incredible how much growth we've seen. I know a lot of people also in the new year start reevaluating maybe what careers they want or what path they want to take. How is the job market looking? I know we've had record unemployment here, but what do we see looking forward?
So that's a little bit of a silver lining, right? Very, very strong job market this last year. It's going to remain strong for a little while. There's going to be points of weakness, right, as things start to slow down a little bit. But for hourly wage earners especially, there's still a lot of need in a lot of those jobs. If you're unemployed or if you're underemployed or maybe you've just been looking for that opportunity to change careers, this is a great time. And it's possibly the best time you're going to see in your lifetime to get out there, try something new, shoot for that job you've always been dreaming about. Get out there and do it now, because later next year we might see that cool off a little bit as people do start to ratchet back their spending and we see employers start to get their hands around the situation a little better. That job market may not be as hot.
That's really interesting to hear, because on one aspect you're saying you need to save a lot of money, but changing jobs can be risky as well. But you're saying this is a good time to find a new start if you're interested.
Yeah, if you have an opportunity right now to do that, it's certainly worth exploring it. You know, and you point out that saving, this is going to be a year about saving 2023. That's not all bad either, because right now with rates up, we're starting to see savings rates go up as well. You can get upwards of 4% and 5% in some cases on savings products right now. now, which we haven't seen rates like that in a long time. So there's some encouragement to save some of that money. Do your budgeting this next year, and you're going to get through this okay.
I like to see those silver linings.
Yeah.
Jeremy, Blair, thank you so much for joining us. Before we go, where can people get more information?
Certainly. Come visit us at macu.com or pop into one of our branches and talk to one of our financial advisors. They'll help you get set on the right track for next year.
All right. Thank you so much for joining us, Jeremy.